Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. What is the WA Cares Fund? Well, the WA Cares Fund is the first government-run long-term care insurance program. It was signed into law in 2019. The program is funded through a payroll deduction of 58 cents for every $100 of W-2 income. There are 9 ways that private long-term care insurance is better than the WA Cares Fund. First off, the WA Cares Fund does not guarantee that the benefits will grow every year. One of the most important things to consider when planning for long-term care is inflation. The cost of care is increasing, primarily due to labor shortages. The WA Cares Fund will increase the fund's benefits periodically based upon the increase in the cost of living in the state of Washington. However, the increase in the benefits is not guaranteed. In fact, the law requires that the increases can only be implemented if the program is adequately funded. The growth in the WA Cares Fund benefits is at the discretion of the trustees. It's not guaranteed. Private long-term care insurance has inflation protection that is fully guaranteed. When you buy a long-term care insurance policy, you choose how much inflation protection you want, and every year your policy benefits will grow by that amount. If, for example, you choose a 3% compound inflation protection, your benefits will grow every year by exactly 3% compounding. With nearly every policy sold today, the growth in the benefits each year does not make the premium go up each year. That increase is built into the premium from the start. The growth in the benefits is guaranteed every year, even while you are on claim receiving benefits from the policy and your premium stops. Number 2, will my premiums go up? Well, with the Washington Cares Fund, there's essentially built-in premium increases. Every time someone gets a pay raise, the amount they pay into the WA Cares Fund goes up. For example, someone making $100,000 per year pays $580 into the WA Cares Fund each year. If that person gets a $50,000 bonus one year, the amount they would have to pay into WA Cares that year would be $870. Every time they get a pay raise or a bonus, the amount they have to pay into the fund goes up, but the amount of benefits they can get for the program stays the same. Now, with private long-term care insurance, will your premiums go up? Maybe. Okay. Private long-term care insurance policies purchased in the state of Washington have very strict rate increase regulations, especially the newest ones. All long-term care insurance policies purchased in Washington since 2008 must comply with Washington state's rate stability regulation. That regulation forces the insurance companies to lower their profits if they seek a rate increase. It also forbids the insurance companies from including normal profit levels in the rate increase itself. So by removing the profit incentive from rate increases, this regulation is helping to curb rate increases on the newer long-term care policies purchased in Washington, and 40 other states have a similar regulation. Now, number 3, does it protect my assets from Medicaid? The WA Cares Fund does not protect your assets from Medicaid. If you use up all $36,500 of benefits from the WA Cares Fund, then you have to start to dip into your savings to pay for your care. Once you've spent your savings down to $2,000, then you can apply for Medicaid-funded long-term care. Now, private long-term care insurance can protect your assets from Medicaid, even if you exhaust the benefits of your policy. These are special policies called long-term care partnership policies. They're available in the state of Washington and about 40 other states. And these policies protect your assets from Medicaid. If, for example, your policy has $300,000 of benefits and you use up all the benefits, you can apply for Medicaid and you can keep $302,000 of savings and still be able to qualify for Medicaid-funded Care. This is called dollar for dollar asset protection. Every dollar you receive in benefits from your policy allows you to protect $1 from Medicaid. And that is something that's in private long-term care insurance policies, but not in the WA Cares Fund. Number 4, how long does it take to be fully vested? Well, with the WA Cares Fund, you must contribute to the fund for 10 years before you're fully invested. And you won't stop contributing after 10 years. You continue to contribute to the program for as long as you earn W-2 income. People born before 1968 can be partially vested. Each year they contribute to the WA Cares Fund, they will be 10% vested. Now, with private long-term care insurance, there's immediate vesting. Private long-term care insurance policies do not have a vesting period. Once you've applied, have been approved, and have paid your first premium, you are fully vested. Number 5, can I get a refund of premiums I've paid? Well, with the WA Cares Fund, no. If you never need long-term care, WA Cares will not give you back any of the premiums you paid into the fund. What about private long-term care insurance? Yes, there are some private long-term care insurance policies that offer a return of premium. If the policyholder passes away without using the benefits, 100% of the premiums are refunded to their heirs. Number 6, can I customize my benefits? Well, with WA Cares, no, you can't customize your benefits. Everyone has the same amount of benefit, $36,500 adjusted for inflation. With private long-term care insurance, yes, you can customize your benefits. This is probably the biggest advantage of private long-term care insurance. There are hundreds of ways to tailor a private long-term care insurance policy to fit your needs, your goals, and your budget. With private long-term care insurance policies today, you can choose a daily benefit, or daily cap, as low as $50, but as much as $500. You can choose inflation protection as low as a 1% compound to as high as 5% compound. And with private long-term care insurance policies, you can choose a lifetime maximum as low as $36,500 to as high as $1.4 million. But it's up to you. With private long-term care insurance, you get to pick what benefits you want, how much you want in benefits. There's no one-size-fits-all with private long-term care insurance. Number 7, is the premium tax deductible? With the WA Cares Fund, no, the premium is not tax deductible. The deduction comes out of each paycheck after taxes. If you're in a 28% federal income tax bracket, the 0.58% payroll deduction is effectively 0.74%. Private long-term care insurance is tax deductible, and the benefits are 100% tax-free for most policies. Now, everyone's tax situation is different, so make sure you discuss yours with your tax advisor. Number 8, if I use up all my benefits and get all better, fully recover, can I use the benefits again if I need care again in the future? Well, with the WA Cares Fund, no. With the WA Cares Fund, once you use up all $36,500 adjusted for inflation, you never get any more benefits, even if you fully recover and start to work again. With private long-term care insurance, yes, there are some policies where it's called restoration of benefits, where you can use the benefits, and then when you get all better, the benefits are put back into your policy. For example, suppose you buy a private long-term care insurance policy with $150,000 worth of benefits. Suppose you need care and you use up all those benefits. If you fully recover, the benefits you received from the policy can be put back into the policy. That $150,000 policy could end up being $300,000 in benefits if you need to use the policy more than once. Lastly, number 9, can my benefits be changed without my consent? With WA Cares, the answer is yes. The trustees can and are legally required to lower the benefits if needed in order to keep the program solvent. Washington state legislators can also pass new laws to change the program's benefits anytime in the future. With private long-term care insurance, once you buy a policy, the insurance company cannot change the benefits of the policy. Every week I read someone posting on the internet that long-term care insurance companies will lower your benefits as you age. That's 100% false. Once you buy a private long-term care insurance policy, the insurance company cannot lower the benefits. You can choose to lower your benefits at any time if you want to, but the insurance company cannot lower your benefits.